Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. As we look back on last week, it was an absolute catastrophe. We saw the S&P down 5.6%, NASDAQ down 5.5%, and the Russell led the way down with a 6.2% decline. All sectors were down. It was just a disaster across the board. One of the things I discuss all the time on the channel is the WaveTech database. We saw some substantial movements in the database on Friday's run. I expected to see a 10 or 15% decline, but we saw even more as the intermediate database clicked down below that magical 42% level that I talk about all the time. This has signaled that the markets are going to go into a more uncertain time than what I had been discussing over the past couple months, as our intermediate database was up at 65% bullish. I'll go through all the details here in a minute, including talking about what is going on in the short-term database as well. This is likely to be one of the most uncertain weeks that we've seen maybe in the history of the stock market. This week I'm going to pull out all the stops, even the crystal ball, as it's going to be a very tough and volatile week to call. As I look at the technicals, which I'll go through in a lot of detail, it does appear we're going to see further downside over the next several weeks. What the outcome of the elections will be, no one knows, but the technicals are telling us there's definitely lower prices coming in. On Friday's video, I alerted you to a warning of a substantial shift in the markets. I didn't really realize what I was seeing until I saw the output of our database that I just discussed a minute ago. This is going to cause a shift in the intermediate forecast that I've been talking about over the past several months. I did have expectations as we came into the third quarter. It wouldn't be as clean as the second quarter, seeing all of the reports come in better than expected. Now, we've seen a very mixed picture as we've come into third quarter results, but these are likely to get even more choppy. This week we've got unemployment numbers coming out on top of the election, and also, as I always talk about every week, is those continuing claims numbers that everybody is focused on. The reports that we'll see come out on Monday and Tuesday are going to be very insignificant. It will all be about the election on Tuesday. On Wednesday, we'll get ADP numbers expected to show 650,000 new jobs. Thursday, we'll get claims and the continuing claims. Claims are expected to show a plus 750,000, but the continuing claims came in at 7.75 last week. We're likely to see this number continue to decline. I believe it's going to come in under 7 million this week and move toward 5.5. Whether or not the COVID situation increases and we start to see any further lockdowns, I don't think we'll see the same things that are happening in Europe, at least not at the moment. We're going to have to get deeper into this season before we'll know anything about that. This week will be very uncertain, and the other thing to keep an eye out on, I'm not sure what we're going to be focused on after the election, but we also have a substantial amount of earnings reports coming out this week. And there are some big numbers coming out this week, make no mistake. We have 1,445 earnings reports, with the bulk of them coming out on Wednesday and Thursday. So there's going to be plenty to digest this week. As I look forward into not only the database, but the technicals, I expect we're going to see plenty of volatility. Last week's ranges kicked volatility up substantially. Let's go ahead and take a look at the charts, see how this week is setting up. As we begin tonight, I'm going to go to the Portfolio Expert website and log into my account. I want to review the database dashboard. Now, this covers just the intermediate side of the database. What it illustrates here is how the histogram is working over time, and we're now seeing us draw on a pure equity viewpoint. we've dropped down to 46%. Now, the overall database, as I mentioned in the opening comments, was at 40%. I'll go through those details in a minute. But what I want to do here is look at the different sectors, and you'll see there was selling across all the sectors. There's a lot of details to go through tonight on the database, but as we look at the subgroups, there is a lot of selling in virtually all industries as we scroll through this. Make sure if you're a customer that you go in and look at this dashboard, and this will give you a lot of insight into where the rotation's going at, and there's quite a bit actually as you scroll through this. I'm not going to go through the individual details, but as we go over to the WaveTech database, right now there's 16,447 symbols in here. We're still long 6,698 symbols, but we're at 42.72. And I talk about this 42% level. This is a level that I have notated over the last 20 years, and when we get below that level, it starts to suggest a negative rotation is likely to occur once it drops below that level. We saw this on a short-term basis right after the September highs occurred. There was a sharp rotation below the 42% level. But looking at the intermediate here is the basic materials, conglomerates, consumer cyclicals, and consumer non-cyclical are the only current sectors that are long. Now there's 12 sectors in our mapping, so there's 4 of them long. Out of the groups, there's 49% of the industry groups are still showing a positive trend, but the symbols are down to 40.72. As we switch over to the daily database, we're now down to 12.45%. We did get down to about 8.5% in the September lows. Now we're back testing those lows, and we're seeing the database back at 12.45%. The big numbers to look at on the database is we did see 8,207 sell signals, and the net with the buys that we had was 8,150 symbols were net sells in the database. This is what triggered the intermediate database down to 40%. This is likely to continue to deteriorate as we go forward in the next several weeks. The other thing to point out here is on this page, all of the sectors on a short-term basis are now neutral. We did have about 5 to 6 sectors long. They have all exited over the last 3 sessions, as we've seen a substantial amount of selling coming across the board. In fact, we've seen over 12,000 sell signals come out in the last 10 days. As we review the S&P futures, they have been up as much as 11 handles overnight. We are now seeing them sell off as we're in the pre-London crowd coming in. We're still about an hour away from the London opening right now, and we are seeing some selling coming in. We traded down just about flat on the session. The configuration suggests we're seeing the PPMs turn up with this slight positive tone in the markets. We are seeing the PPMs turn up, suggesting that from a viewpoint, if we look at the market grid, we're likely to see an S1, R1 number. If we can get above R1, then we could see R2, which it would be 3309. So far overnight, we've already printed an S1, 3243.75 is S1, the low 3243.25. So look for S1, R2. If we do take out the support 1, then we're going to see a further decline moving toward 3243, 3220. As we go to the S&P cash, this is going to set up a very interesting scenario. Looking at the market grid for tomorrow, the S1 is 3252. We went out at 3269. After the close on the cash on Friday, we did see a substantial short covering rally, but we were fading a little bit off of that, so we're up about 30 handles off of that low. From where we went out on the close, we're likely to come in basically on change, maybe a little higher as it stands right now. As we look at the market grid, the S1 number, 3252, is likely to be the low, just like on the futures, 3152. with a minimum target of 32.87, the possibility of trading back above 33.07. The thing I want to point out here is that PPM1 has rolled over substantially. It is at a minus 0.63, which is well into a downtrend mode. The PPM2 and 3 are still neutral. They're just beginning the rollover phase. So there's going to be substantial amount of resistance up between 33.07 and the 33.27 levels. Now the weekly charts will reveal a bit more of this picture as we look at the market grid for this week. S1 32.38, R1 33.01. So this is an S1 R1, the possibility of going up to R2 33.37. We could see further short covering as the session unfolds today as folks look to square up ahead of the election on Tuesday. I don't believe we'll see heavy selling into the markets, but we look at the market grid below 32.38. The next level is 32.02. Then the next level is 31.67. There's a lot to digest this week, so I'll be actually trying to unfold this, and I have a sense that I might be doing a lot of live streams. I mentioned in Saturday's live stream meeting that I did that we will be doing a Tuesday night election market live stream, and that will be the video for Wednesday. So I'll do a lot of analysis live that evening. But the overall pattern suggests that we are going to continue to move toward 31.20. That will be the 40-week moving average. That's also close to the Fibonacci relationship from the bottom up of 0.618, which is 30.31. So we're going to see a move down toward 31.20 to the extreme of 30.31. And we're also seeing, just a quick mention here, we're also seeing a rollover in PPM 1, 2, and 3 on a weekly basis. This is substantial, and this is why the database review that I just went to is very substantial, suggesting there's going to be downside at least to this level and possibly much lower. The next market that I'll cover is the NASDAQ. And the NASDAQ, as I've talked about for the past several weeks, has a much stronger looking pattern than we have in all the other indices. And that makes sense since it's been the leader of this rally. The 21 period moving average is at 11,038, and we're likely to maintain that level. We have dipped down to 10,891. We're back up at 11,093, so we're just above it again. So we saw some weakness overnight toward that level. 10,908 is S1, 10,981 is the low so far tonight. So expect on a weekly basis here to see a possibility of an R2, S2. We could see a substantial amount of volatility, but just know that that 11,037 is substantial support. The PPM2 is up at 0.63, and that tells us there's only a 40% probability that on Friday that we're going to close below that level. So overall, just looking at these indices in general, there is going to be support under the market. I don't think we will just outright collapse this week. Most likely we're going to see a recovery week, but if we get huge volatility, you can see the numbers here on the market grid for the NASDAQ futures. The extreme expected would be somewhere between S2, 10,754, extreme 10,462, but this 21 period moving average will be substantial support. Next market I'll cover is the US dollar. The dollar continues to strengthen here, and it's very interesting as PPM1 is now at a plus 0.19, almost at trend mode on the weekly charts. We're trading right into the resistance on the 21-week moving average at 94.28. The current high so far is 94.18. If we get above that level, we go and look at the market grid. We're going to see that R1 is 30. We're likely to stall at that level, and S1 R1. But if we get above that level, then 94.62 will be the next level to pay attention to. And it does look like this strengthening and this bottoming pattern that I have been talking about going back to July is continuing to unfold, and looks like the Dow wants to get a lot stronger yet. The final market that I'll cover tonight is gold. Gold is up $5 right now, up 0.25%. We did trade down sharply lower last week as we traded down toward the lows that we made in early October at 1851. The low last week was 1859. The low overnight so far has been 1873. So that 1851 is going to be your pivot point. Break below that, we would see further declines toward the 1809 level. That 40-week moving average is going to be the primary support line at this time. The expectations are with the PPM1 down at 0.47 is starting to accelerate back down, that there's no way that we're going to get much above 1902 to 1912 on any rallies. This market will remain under pressure and most likely move ultimately toward that 1809 level, and 1851 will be the pivot point. This will complete the video. Thanks again for watching. We'll talk to you tomorrow night.